Good evening, members present here and present virtually. Now we have session on applicability of GST on cooperative societies by CA Anil Bharadwaj. Can I request MC member Rejo Johnson to escort speaker Anil Bharadwaj onto dais and then welcome with floral bouquet. Thank you, Rejo. CA Anil Bharadwaj is a graduate and a master in business laws from National Law School of India University. He's a chartered accountant, qualified in 2016, and senior partner and founder partner of Bharadwaj and Hosmet Chartered Accountants. He's a visiting professor at Mount Carmel College, AAC College, Sheshadipram Global Management Studies, and Ramaya Institute of Management Studies. He's also a member of Internal Quality Assurance Cell constituted for NAC at Vasavi Vidyaniketan College, Pasangudi, Bangalore, and also a member of Board of Studies, Mount Carmel College, and also co-operative member of Syllabus Review Committee, Board of Studies, Bangalore University. He has been a resource person, keynote speaker, and panelist in more than 35 national conferences conducted by various universities and colleges across Karnataka. He has given more than 100 seminars on GST till date and being an advisor for many cooperative societies on GST. Being recognized as one of the few resource persons who can explain the tax provision in Kannada language. This has helped the spread of knowledge at rural areas where English is still a foreign language. Has provided many corporate training programs on tax planning and creation of healthy portfolio to maximize the return at minimum risk rate. Has presented papers in many conferences on various topics of goods and service tax, stock market, demonetization, income tax, etc. He is one of the most preferred resource person for ICAI on various topics, including programs on investment awareness, wealth creation, and tax planning for investors. He has been guiding thousands of students in CA course and post-graduation courses in structuring their career. Apart from this, CA Anil Bharadwaj is also a stage artist and have acted in more than 25 dramas, which are presented on almost all prestigious stages in Karnataka, Mumbai, Pune, etc. He is a Gamaka artist, an ancient art of singing the Kannada poem in appropriate raga according to its situation and feeling. And also he has won so many awards and achievements. Served as Students Union Secretary in MES Main College, has been awarded as the Most Talented Student Award in 2012, has been awarded as the Best Comedian for 3 consecutive years by Bangalore University and Kannada and Cultural Department, Government of Karnataka, and has been awarded as Best Mimicry Artist by Bangalore University. With this brief introduction, I present you before you, CA Anil Bharadwaj. Over to you, sir.
Padam Kalakramenahi. Over a period of our life, we keep getting knowledge, and our knowledge will never get fulfilled until our last breath of our life. So, my dear friends, today we are here to know the applicability of GST to the cooperative society and the cooperative sector. Sometimes it feels very funny to speak about GST to the chartered accountants themselves, because you're all very well versed with the GST provisions. But nevertheless, with all of us being in Karnataka, I still feel about 75% of cooperative societies are still not compliant with GST. Do you agree with me? So this is our main responsibility, to understand the various provisions of GST and applicability of the GST for cooperative societies, and how well during our audit time we can bring those non-compliant cooperative societies to the ambit of GST and make them the healthy and compliant cooperatives. So today my focus will be mostly on the registration part, applicability, and then RCM provisions, and then ITC, and then moving on to registration, and what are all the probable litigation that may arise in GST now that the notices have started coming. So at the end, we will also discuss what are the probable litigating matters in GST era. Applicability. Before GST was introduced, service tax was there, and for cooperative societies, service tax was not applicable because of mutuality concept. In income tax, we were discussing about mutuality till now. Mutuality, what we discussed in income tax, is totally different from what we are discussing in GST. And the concept of mutuality is no more accepted in GST, and the act is very clear. Any services provided by any association, society, whoever it is, to its members are well within the ambit of business under the definition of 217. 217 of CGST Act gives the definition of business. Under the definition, clause E clearly says any services or any activity that is given by association or society to its members are well within the ambit of business or in the course or furtherance of business. So no concept of mutuality in GST for cooperative societies. That is very clear. The question never arises. Then the question arises, what are the activities of society that are taxable? Every supply of goods and services or both are taxable under CGST Act, is told by section 9. The charging section of the GST is section 9, which clearly spells out every supply of goods or services or both have to be charged under GST. Then what is supply is the next question. What is supply? Supply includes sale, transfer, exchange, barter, lease, rental. It includes everything, all the modes of transaction between two people. Even transfer between the branches which are located in two different states are also considered as supply. Sale, providing a service, providing lease service, rentals, exchange, barter, everything is included in supply if it is done in course or furtherance of business. And the third most important thing, for a consideration. So three important things to be considered while determining the tax under GST or applicability of tax under GST. That is, whether is there any supply. If supply is there, then it is for consideration or without consideration. If it is for consideration, then is it in the course or furtherance of business? Nevertheless, GST also applies for the supplies where no consideration is also there. Under what schedule, can anyone say? Can the GST be applied even if there is no consideration during the supply? Schedule 1 to CGST Act clearly says even if there is no consideration, the supply can still be charged under GST. So let us not go detail into that. If a cooperative society has to be considered as chargeable under GST, then there has to be supply between society to its members. Second, there has to be a consideration. And third, it is now that decided, it is in course or furtherance of business. Then comes the aggregate turnover definition when it is liable to GST. Then we'll go with section 22 first, then go to aggregate turnover. When is the GST applicable? Is it 20 lakhs or 40 lakhs? 20 lakhs in case of services and 40 lakhs in case of goods. What if there are both goods as well as services? So a primary number, the magic number under GST is 20 lakhs. However, CGST Act has given with the power of state, the state can enhance the amount of 20 lakhs to an extent of 40 lakhs if the person, if a taxable person is doing exclusively supply of goods. So the word exclusively is very important. Only those societies which are exclusively indulged in supply of goods only can claim non-registration up to 40 lakhs. Otherwise, all other societies, whether only exclusively indulge in service or goods, both, the limit is still 20 lakhs, 40 lakhs is not applicable. And what is this 20 lakhs and 40 lakhs? Is the aggregate turnover. The definition of aggregate turnover is very wide and vast. It includes taxable turnover. It includes exempted turnover. It includes export, that is zero rated turnover. And it also includes the turnover made between the assessees having the same PAN, who are called distinct persons under GST. Who are the distinct persons? Distinct persons are those persons who got different registration for their same PAN. So any transaction between these distinct persons also will be considered for the purpose of aggregate turnover for the whole of the year. So aggregate annual turnover we can say, though the definition only says aggregate turnover. So here we'll have to be very careful. What are all the usual turnover of the cooperative societies? What is the usual turnover of the cooperative societies? Say if it is credit cooperative society, interest earned on their deposits in the bank, interest earned on their lendings, any other charges that they have charged during the course of their business with the members, like there can be a loan processing fee, there can be a SB account maintenance charges, there can be share fee. Is share fee also considered as charges? What about share capital? Is share capital considered as income? Is it goods? Is it service? Do we charge GST on share? No, because it is transaction in money, and any transaction in money is excluded from the definition goods. So share will not be considered for the purpose of GST, but any amount charged over and above the share, not the premium, any share fee or share charges, entry fee, or any membership fee, all those charges or fees in whatever name called will be considered as an income of cooperative society, and those income are considered as other income, which are taxable services, taxable supply. Interest under notification 12/2017 dated 28/6/2017 specifically mentioned in the list of exempted services where any interest is received as a consideration for the purpose of lending the money or deposits or acceptance of deposits, then such interest will be excluded from the ambit of or is exempt under GST. That means exempt service should also be considered for the purpose of registration, but taxes are not applicable on the income. I repeat, interest income is an exempt income. Exempt income should be considered while determining the liability of the cooperative society to get registered under GST or not. However, the GST is not calculated on interest, and GST is calculated only on other charges at the rate of 18% or whatever is the applicable rate for other goods that the society is dealing with. Now the question arises as to whether a cooperative society is eligible to be registered under composition scheme. What is your say? Can a cooperative society be registered under composition scheme? Can anyone give the answer or your opinion? If it is dealing only in sale of goods, it can probably get registered under composition scheme. For example, PACs. Can PACs be registered under composition scheme? Is it advisable for a PACs PACS means primary agricultural cooperative societies, who is dealing with mostly the fertilizers or pesticides. Are they advised to get registered under composition? What is your opinion? No. They may be eligible to be registered under composition scheme, but we do not advise. Why? Because their purchases has GST. So if they are registered under composition, they will lose the opportunity of getting the input tax credit. So for a PACS who is dealing with goods, especially the fertilizers or pesticides, for which for their purchases they have input tax credit, if they take composition scheme, they'll be denied of this denied of this ITC, and we will not recommend for a PACS to get registered under composition scheme. What about credit cooperative societies? Can a credit cooperative society who is predominantly dealing in providing a provision of service be registered under composition? Composition of services. Section 2, subsection 2A, section 10, I'm sorry. Section 10, subsection 2A of CGST Act, which has newly introduced in 2019, has given an option for the first time in the history of independent India, a composition scheme for service providers. So that composition for service providers can definitely be availed by cooperative societies who are credit cooperative society especially, or any other cooperative society who are mainly dealing with service activity. But predominantly, I recommend and advise all the credit cooperative, mid-size or small credit cooperative societies to get registered under composition scheme for services. Why? We will deal more, we'll have more discussion about it. The Act says any service provider whose aggregate turnover in the previous financial year is less than 50 lakhs can opt for composition scheme under services. Their aggregate turnover has to be less than 50 lakhs in the previous financial year. But what is the aggregate turnover? Aggregate turnover, what we discussed just few minutes before, is totally different from the aggregate turnover that we are discussing now. In our previous aggregate turnover discussion, we included taxable turnover, exempted turnover, zero rated turnover. Yes or no? Whereas here, I still deal with taxable supply, exempt supply, but I exclude the interest that we have earned from lending or deposits. Any money that the cooperative society has earned as a consideration for acceptance of deposits for purpose of lending, if it has accepted interest, this interest component has to be excluded from the definition of aggregate turnover only for the purpose of composition supply or composition scheme. That means a cooperative society, credit cooperative society, whose 95% or 98% of income is interest, will be excluded from the definition of aggregate turnover, and 18% of tax what they are paying on the other charges is no more required. They can pay only 3 plus 3, 3% on CGST and 3% on SGST, 6% on the other charges. There may be an argument saying, for composition supplier, he cannot collect the tax from the members. Whereas if he is regular, he can collect the tax from member and pay to the government. Society has nothing to do with the tax. It has no effect, financial effect. It collects 18% from the members for other charges and deposit it into the government. If it is composition, it may not do so. It has to forego its own money for paying composition tax. I have an answer for it. If credit cooperative societies are advised to increase their charges little bit, for example, what is a burn for the member? Say if charges are 100 rupees, say loan processing fee is 100 rupees, what is the exact burn for the member? 100 plus 18% tax in the regular scheme. How much it will be? 118. What is the income for the society? 118 or 100 only? 100 only. So 18 is going to the government. I recommend the cooperative societies through their AGM, if they can increase, or if through their board of meeting, if they can increase the charges from 100 to 110. What is the burn for the members? From 118, it came down to 110. So members saved 8 rupees. What was the income for society before in the regular scheme? 100 rupees. Now, with 110, 6% if they pay out of their pocket, it will be 6 rupees 60 paisa. 110 minus 6 rupees 60 paisa will be 103.4. In regular scheme, they were getting only 100 rupees. With the composition scheme, they are getting 103.4. Both from members' perspective as well as from credit cooperative perspective, it is mutually beneficial. Do you agree with me, or you have any counter question to this? No, there I'll come to it. I'll come to it. Very important. So if it is a composition scheme, input tax credit share cannot be availed. But there will not be major input tax credit for credit cooperative societies. When I'm dealing with cooperative, when I'm speaking of composition scheme, I'm keeping credit cooperative societies in mind. Especially for credit cooperatives, what can be the input tax credit? Any purchase of maybe capital purchase like furnitures, desktops, or stationaries, which will be very minimal. With this 3 rupees 40 paisa increase in their income, they can make up that ITC. I have seen and I have evaluated this proposal with not less than 20 to 25 credit cooperative societies, and all of them are being beneficial of this provision. So I suggest and recommend a credit cooperative society whose predominant income is interest, and their other income, other charges which are taxable under GST are less than 50 lakhs, can opt for composition scheme. But the fate is, the composition scheme for the existing registered people have to be opted before the start of year. So now we are in April. So now we are in May. May we cannot opt for composition scheme who are already registered. A registered person cannot opt for composition scheme for this financial year. If at all, if he has to opt for composition, he has to wait for 1 year to complete, and he can opt only from next financial year. Whereas a person who has not registered, who is going for the first time registration, while taking the registration itself, he has to apply for the composition scheme. So this is what the key thing that we could discuss in GST's today's seminar on composition scheme. So once the composition scheme is opted, he cannot give an invoice. He has to give something called as bill of supply, and he cannot collect the taxes from the member. He has to pay out of his own pocket, and he cannot avail any ITC whatsoever on his purchases or input services or on capital goods. And lastly, once the composition scheme is opted, it has to be opted for all his registration. If he has more than one registrations in a state, he has to apply for all the state, or if it is a multi-state cooperative society, the society has to apply for all the states composition. It cannot differentiate from state to state. So that is the main disadvantage, if at all, if it is particular to a cooperative society. Yes. No. Definitely, urban bank can also go, because there is no distinction like income tax between society and bank here. For GST, it is very simple. Whether it is A or B, your activity is important. If your activity is mostly of lending and your other income is less than 50 lakhs, you can definitely go for composition scheme, even for urban banks. Yes, exactly. 50% will vanish. Anyway, entire when you cannot avail the ITC, whole of the ITC can be taken as expenditure. And if it is a capital goods, you can capitalize it and claim the depreciation on the whole of the ITC. So, definitely, definitely, because interest is not included in the for the purpose of aggregate turnover under composition scheme. Any doubt? I can go ahead. Yes, thank you. Then applicability of RCM for cooperative societies, this being a very important discussion, predominantly for cooperative societies which are dealing in goods. This first picture will be very much applicable. Can you make out what exactly is that picture talk about? Transportation. So when we say transportation, it is GTA services. So any cooperative services, cooperative society which is availing a GTA service have to be very careful in determining whether they have an RCM liability. For example, a PAX, primary agricultural cooperative societies, deal with fertilizers predominantly. So when they are buying the fertilizer or when they are selling it, if they are taking care of the transportation and if they get a service from a GTA, then it is liable for RCM. What exactly is the provision under RCM for GTA? If GTA is providing, GTA means Goods Transportation Agency. So if GTA is providing a bill of 12% GST, along with their charges, if they are charging 12% GST, then the RCM does not apply for the cooperative societies. If they don't charge 12% of GST, or if they do not charge GST at all in their invoice, or if they give only transportation note, consignment note to the cooperative society, and the cooperative society expenses it as a transportation charges, definitely the RCM implication arises here. And we have to be very careful. RCM will not have any financial implication if it is done on time. Otherwise, it will have a huge loss, because once the notice is served and during the assessment, if the RCM is caught and the liability arises under RCM, then there is no question of ITC. So every cooperative society who is dealing with or who is making the payment of transportation or who is availing the goods transport agency services have to be very careful, and during our audit we have to pinpoint that transportation and ensure that the RCM is paid on that. We'll have to be very careful in this. If at all, if GTA charges the GST on the transportation bill at 12%, no RCM. If there is no 12% GST, then RCM applies on the recipient, that is cooperative society, at the rate of 5% only. The RCM for recipient is at 5%, not at 12%. So many times I have seen people charging 18% on transportation or 12% on transportation. RCM is at the rate of only 5%, only for the purpose of GTA services. And even for CAP services, I have not included the CAP services even in my notes. You can take, even if it is a CAP service, if a CAP service is provided by a CAP operator to a cooperative society for bringing the president, secretary, or the employees of the cooperative society from their residence to the office or office to residence, whatever it is, if it is for business purpose, and if the cab operator does not charge 12% GST, the onus is on the cooperative society. Cooperative society has to pay the GST under RCM at 5%. Is that clear? Any doubt on this? Next, moving on to advocate services, you can see the second picture. Legal services, any legal services taken or availed by the cooperative society, RCM straight away applies. We have to be very careful here. The GST is of twofold. One, while collecting the legal charges from the member, if they are collecting legal charges separately from the member, they have to pay GST for their income. That is one. If they are paying to the advocate, and if advocate raises a bill on the cooperative society, there the second fold of GST also come, RCM. So the same income is taxed twice. One as an income, one as an expenditure. Did you understand? ನಾನು ಹೇಳ್ತಾ ಇರೋದು ಅರ್ಥ ಆಗ್ತಿದೆಯಾ ನಿಮಗೆ? ಸೊ ಅದನ್ನು ಬಹಳ ಹುಷಾರಾಗಿ ನೋಡ್ಕೋಬೇಕು. If they are charging, if in the P&L account of the cooperative society, if they are showing under the income side, legal charges received, touch 18% GST. Or if they are composition, 6%. And if they are paying legal charges, still on that 18% RCM will apply. So for legal charges under RCM, 18% is the rate. Even if the society is registered under composition, it is not denied from RCM. Still the liability under RCM is there, even if they are registered under composition scheme. So we'll have to be very careful. This is the usual practice. As far as I have seen, all the cooperative societies does this, especially credit cooperative societies. Many cooperative societies, credit cooperative society especially does this. So it has to be very careful. Both income as well as expenditure. That's what. If it is that case, if it does not route it through P&L account, then the system is slightly different. The invoice has to be raised directly to the member, not to the cooperative society. For the payment advice, if you attach the invoice of the advocate, then gone. Even if it is routed through this one balance sheet, it will be taxed. Invoice should be in the name of the member. If invoice in the name of the member, RCM also does not arise, charges also does not arise. As sir rightly said, we act as a pure agent. I mean, cooperative society acts as a pure agent. So here there is no implication, no double fold, entire double fold implication of GST vanishes here. Then there are some, I'm finding one myth in the fellow chartered accountants, where some people are suggesting to pay RCM for remuneration of the directors or directors remuneration, whether RCM is applicable. No, clear no for cooperative societies, because RCM, it is very clear under the notification, RCM notification, it is for body corporate remuneration to the directors of a body corporate, and from the definition of the body corporate, cooperative society is very particularly excluded without any ambiguity. Without any ambiguity, no question of difference here or difference of opinion here. It is thoroughly excluded from the definition of body corporate, and it is applicable only for the body corporate and not for the cooperative societies. Yes. Correct. Correct. Cooperative Act may say it is body corporate, but Cooperative Act is not the charging section for GST. For charging section of GST, we have to see GST Act, and under GST Act, body corporate is defined, and in GST Act, body corporate excludes cooperative society. Hence, no RCM implication for remuneration to directors. Any argument on this? So it is very clear, no GST implication, RCM implication on remuneration to the directors. No, is sitting fee included in the RCM notification? No. So it's a normal expenditure. When it is normal expenditure, no RCM implication for cooperative societies. That is Cooperative Society Act. Is remuneration allowed to directors? So sitting fee may be considered as a remuneration in sitting fee is included in remuneration, of course, yes. So if at all, if you pay sitting fee to the director of a cooperative society, no RCM implication, absolutely. In whatever name called, you call it sitting fee or meeting fee or transport allowance, TA, DA, whatever it is, paid to the director, RCM implication is not there. Yeah. In Companies Act, it will definitely attract. In Companies Act, again the question whether you are paying director a salary, whether you are deducting the TDS under 192B, and you have included them for PF calculation as an employee or not. If you are deducting under 194J and not included and as a employee under PF, then definitely RCM implication applies. Correct. That's all for cooperative, especially. That's why for cooperatives I have said, only for cooperatives I am speaking, no RCM absolutely. So there are other RCM implications which more or less are not very, on a day-to-day affairs, it may not be very practicable. So that's why I'm not included. Next, we go on input tax credit. These two picture signifies, the first one is proportional claim of ITC under 17 subsection 2. And the second picture is presumptive input tax credit, availing a presumptive rate of input tax credit. So a cooperative society can choose to pay on a presumptive basis at flat 50%, as you rightly said, irrespective of its proportion of taxable income or exempt income. It can still pay, it can still avail the input tax credit of 50%, provided they are registered under regular scheme. If they are registered under composition, the entire slide becomes irrelevant. So either proportion or presumptive has to be chosen again at the beginning of the year, and once it is chosen, it freezes for the entire year. We cannot change, and it can be changed year on year. It's not for the lifetime, but it has to be fixed for the particular year. Understood? So next question comes, blocked credits. This is a very important section, section 17 subsection 5, and that too there are 2-3 important lines or 2-3 important items on which the input tax credits are definitely not allowable. The very first one is motor vehicle. President buys Innova car, puts Sahakari name and moves around for Sahakari purpose only. Still, if it is business purpose, on any expenditure on motor vehicle, not allowed. Whereas if a PAX buys a lorry for transportation of its goods, it is allowed. So any motor vehicle used for the transportation of goods is not blocked. It is, the input tax credit is still allowed, and any incidental charges for that particular vehicle which is meant for goods transportation agency, goods transportation, is still allowed as an expenditure. Whereas any other purposes, though business, is not allowed. For example, purchase of tires or maintenance of vehicle, service charges, any GST paid on that cannot be claimed as a credit. If suppose if the society is dealing with reselling of vehicle, the main activity object of the society is to buy and sell the motor vehicle, even then the ITC is allowed. It is not blocked in such circumstances. And if they are running any motor vehicle driving school, even in motor driving school, the input tax credit is allowed. All other circumstances, input tax credit is blocked. The next important one is AGM lunch or dinner. So every year, as a matter of Cooperative Act, they have to conduct an AGM. When the members have come, they'll arrange for the food. When the caterer gives the GST bill, the cooperative society cannot claim the GST credit. Second, the third one is works contract for immovable property. Most predominant point of the blocking of input tax credit. Every society, one or the other day, tries to build its own building, have its own building. So any construction of its building, any related expenses cannot be considered as or cannot be allowed for the purpose of input tax credit. Even then, if you are, there are similar cases, on this. Even if you build a building for the purpose of renting out, the building cannot be considered, the expenses on the construction of building, you cannot avail the input tax credit. For that, you have to be in the line of construction. Or your objective says constructing a building and renting it out, or construction of a building and selling it out, then input tax credit is allowed. If cooperative society is predominant, for example, I'll take a cooperative society's example. One credit cooperative society is there. It constructs a building. Half of the building is rented out. Only small portion of that building is used for its own purpose. Remaining 90% of the building is rented out. Still, ITC cannot be availed. If it is a housing cooperative society, where the predominant objective of the cooperative society is to construct building and sell, construct a house and sell, construct a commercial building and sell, then on every penny of the amount spent, you can avail the input tax credit. Yes. No, there the predominant activity of the cooperative society was to give it on rent. So objective is very important. So if the main objects of the cooperative society is to construct a building and rent it out, then yes. If it is an ancillary service, if it is an ancillary objective, then no. No. No, still no. That's the main problem. No? They will not pay the GST at all. Sir, your case I have seen, but where that this one is, I don't remember the name of the case citation, but the important objects was they were works contractors. So this survey, this blocking of credit is not applicable for the respective business people. If they are indulged in food catering business, for them their input tax is still allowed if it is a food. For motor vehicle, if you are indulged in service of motor vehicle, selling of motor vehicle or driving school of motor vehicle, still the input tax credit is allowed. For you to avail the input tax credit, the assessee has to be on the same line of business, not a different line of business. Then self-construction of immovable property, again I have covered here. And inward supply used for personal consumption, no, it is well thought out law. And free sample gifts, goods lost or stolen, you cannot claim the input tax credit unless it is a normal loss in the course of business. If it is a normal loss, weight law, I mean for certain goods, there will be reduction in weight. So if it is a normal loss, still it is ITC is allowed. If it is abnormal loss or stolen, theft, or even destroyed due to natural calamities or anything, you cannot claim the input tax credit. If at all the input tax credit is already availed, we'll have to reverse it. Next, any question on this? On the input taxes? Then I'll move on to the returns. We all know I need not have to emphasize much on the returns, but it is very important for every assessee to file their GSTR1 if they are registered under regular scheme before 11th of every month. Previously it was 10th, now it is postponed by a day. before 11th, it has to be done. If it is quarterly, if they have opted for QRMP, what is QRMP? Quarterly return and monthly payment, they may file with up to 13th, 1/3, up to 13th of every month in invoice furnishing facility, IFF we call. It is not GSTR1, it is IFF if it is quarterly returns. So if it is quarterly, before 13th, if it is monthly, before 11th, GSTR1 has to be filed, otherwise it will not be reflected in 2B. So it is very important for every cooperative society who is registered regularly and claiming the 50% of input tax credit to match their returns with GSTR 2B. No variations are allowed absolutely, at least till December 31st, 2021. 10% variation, 5% variation was allowed. Now, even that variation is not allowed. 100% matching of 2B has to be done. If there is any variation, the system automatically throws the notice. The notice have not yet started coming for those 2B things. For few assessees, it has already come, but definitely over a period to come, we all see such notices, and more than our regular complaints, we will be running behind the GST offices is what I feel in another 1 year's time. The next GSTR 3B, when we are filing the GSTR 3B, matching GSTR 1 and 2B and taking exactly 50% of 2B's return is very much compulsory. And for presumptive taxation, both input services and capital goods, input on capital goods are allowed for the purpose of 50%. So only those things can be availed. And GSTR 4 is for those people who get registered themselves under composition scheme. For composition scheme, what are all the advantages I say? If a credit cooperative society is registered under composition, they need not have to comply the GST requirement on monthly basis. From monthly, it will shift to quarterly. So if they are not very compliant on monthly basis, at least their liability on late fee and interest reduces. And tax is 6% instead of 18%, again the liability reduces. And every composition dealer has to pay tax on quarterly basis on or before 18th of the subsequent month of the quarter ending under CMP 08. CMP 08, it is only a payment challan, and at the end of the year, only one return has to be filed. Instead of 24 returns during the month, it will be reduced to 5. How 24? In fact, 25. 9 and 9C also, if you take 26. So instead of 26, you'll straight away come to 7. How 7? 4 CMP 08s for 4 quarters and 1 GSTR 4 for the annual returns, and 9 is not there when we have filed GSTR 4. 9 is not applicable, and 9C is not applicable because their turnover has to be less than 50 lakhs. So both 9 and 9C is not applicable. From 26 returns, we straight away come down to 5 returns if it is composition scheme. So with all these things, I always recommend for credit cooperative societies, it is beneficial to have composition scheme. And then we have 9. If at all, if the assessee's turnover is more than 2 crores, they have to compulsorily file GSTR 9. If it is less than 2 crores, they have an option. They can still go voluntarily and file the GSTR 9. And if their annual aggregate turnover increases by 5 crores, they have to compulsorily do 9C. Unfortunately, or fortunately, rather, I don't call unfortunately. Fortunately, the requirement of audit and requirement of signature of an auditor for 9C is done away with from last year. Are you favorable for this signature going out, or we wanted the audit to be there? It's a different opinion. Huh? It's a mixed opinion. If the client is non-compliant, it is better. The audit is not there. If they are very good and compliant, correct. Fees is gone. We have regrets for that fees to go out, but the great risk is come down. I feel the fees was much lesser than the risk that we would have taken in signing the 9C. So it is welcoming provision for not getting the 9C signed by the chartered accountant. So these are some of the returns that has to be filed on timely basis if you are registered under regular scheme and if you are registered under composition scheme. And with this, I say, in time to come, these are all are possible litigation under GST. 75% of cooperative societies are potential clients because they are not registered. Second, out of the 25, at least 50% of them are non-compliant by not filing or late filing. So they are also our potential clients for litigation. And excess claim of ITC, 99% of people would have claimed excess ITC either genuinely or non-genuinely. So they would have claimed the excess. They would have had the proper invoice, but the dealer would have not filed the returns properly in time or would have not filed the returns at all. So we would have had the valid invoice but not reflecting in 2B may also lead to this third important point, excess claim of ITC. So these are all some of the litigating items that we may come across in future. And the last but not least, the RCM. Almost 99% of cooperative societies will have this problem of RCM. So any other litigation that you are overseeing apart from what I have listed out? Sir? Non-registration, non-filing, late filing, excess claim of ITC, RCM not being paid on time. Others? So these are the mostly possible litigation. So I feel over time to come, the complaints will be very lesser. Everything is becoming automated, especially with respect to GST. If entire assessee is compelled to do e-invoicing, then the question of filing GSTR 1 may vanish. Now already the significance of 3B has gone because we are downloading the 3B, auto-populated 3B, we are just uploading by click of a button. If they done away with that click of button, 3B will automatically be paid if they pay if we make the GST payment. So only payment will be the important factor for GST compliance in time to come, according to me. Then the possible area of practice for all chartered accountants like us is litigation in GST because litigation cannot be automated. Thank you. If at all, if you have any question, I would be very happy to take it. We had only 1 hour time. I have exactly finished within my time. And this was the last session, I know. Any question? Are owners association cooperative societies? No, it is under what? Whether RCM paid at the time of audit can be claimed as input? Yes, if it is recognized before September of the subsequent year, if the RCM is recognized and it is not paid, you can still pay and claim the input tax credit. The only liability will be the interest. Because time of supply matters. For RCM, date of invoice, 60 days from the date of invoice or the date of payment, whichever is earlier, is the time of supply. If we recognize during the audit and make the assessee to pay the RCM during the audit, the assessee can still claim the ITC, but interest have to be paid over and above the RCM for those months. From the time of supply till the date of payment, interest have to be paid. That's all. Online questions. Short paid of output tax, yes. If you don't pay the tax, whatever the liability you have generated, the returns cannot be filed. No. If you have declared short income, Oh, it's a fraud. Definitely, short payment, short, yes, assessing the lesser income, assessing the lesser income or not determining the proper aggregate turnover itself is a probable litigating matter. Thank you very much for giving me an opportunity to share small knowledge that I possess. Thank you very much.
Thank you, CA Anil Bharadwaj, for that knowledge enriching session on applicability of GST on cooperative societies and sector. It was very clear and crisp. Now, can I request CA Rejo J. Johnson, MC member, to hand over a memento in token of gratitude on behalf of Bangalore branch of SIRCF ICI and all present here. Thank you. I hand it over to Pramod for formal vote of thanks.
To cooperative society, Sally, did you expect anything else? If you can let me know, I can include it in my future presentations. What other probable topics that I could have covered in GST? Have I covered mostly everything? Thank you.
Thank you. I consider it a great privilege to propose a vote of thanks to all the dignitaries who have made it convenient to attend the program today. I also express my sincere thanks to all the esteemed guests and the dignitaries who have made it and who have taken a keen interest in the program and have taken their time out in their busy schedule and being a weekday also to attend this event. Lastly, my thanks are due to my colleagues in the committee and officers and staffs who have worked together with a great dedication to make this program a grand success. I thank you, each one of you on behalf of Bangalore branch of SIRC for being a part of this event and making this event a huge success. Thank you, everyone.